Welcome back everyone to another video, and we're going to be doing a backtesting session from the ICT silver bullet for Japanese yen dollar. I had a video that I just released for the NFP Friday showing you guys how instead of trading NASDAQ, if you're not liking the type of price action you're seeing, you can head over to the currencies like Euro, Japanese yen, GBP. And you might find some better setups during this ICT silver bullet. And of course, I'm going to be implementing my type of twist on it. I follow certain guidelines within my model, but again, you guys can follow along and see how I really engage in price, and what are the things that I'm looking for before engaging. So on the left side, you guys are going to see the 1 minute chart here, and then on the right side, it's going to be the 15 minute. I'm going to be going between both of them. That way, when I'm using the rewind tool, I can see if my model was there or if it wasn't. And once again, if you guys also want the notes for these, I can definitely get a PDF and share them with you guys. Just comment down below if you guys want these notes. Alrighty, so let's get started. So here we are. We're starting on July 29th for Monday. It's actually Tuesday in Japan, so technically my model says that I can't trade Mondays. But because technically Sunday is Monday for the Asian markets, I can trade the Monday here for the Japanese yen dollar instead of waiting. For example, if I was trading NASDAQ, I would have to wait. So we're going to skip here and see what we get for the 10 a.m. session. So from the looks of it here, we're taking liquidity leading up to that 10 to 11 a.m. ICT silver bullet, which is in my model. And also we're below midnight open. So, I always talk about how if you're below midnight open, ideally you want to be a buyer, as this is where really the market makers are going to be accumulating their long orders rather than going short. And I also utilize the 10 a.m. opening here just to see if we have what's called, I call it like a double discount. Where you also have the power of three, where you're below the opening hour that you're trading, but also the midnight open. It gives you even more confirmation bias as to what you're trading going into the day. And really the only other key level I would have is this order block here. And the reason why this would be an order block, which is rather simple, you have these two down close candles here, and then it's engulfed by these three up close candles. So that's going to be your bullish order block on the 15-minute. And what we're going to do is we're going to change that to a green 15-minute plus OB. And I'm just going to make sure I put this on the current interval and below, so that way I can see it also on the 1 minute. But really, other than that, I might also want to note this rejection block here on the 15-minute, because as we can see here, price stopped here twice. Look at the bodies, actually 3 times, and then we head lower. So this as we can see here, actually just at the macro, at that 1150 macro, price retraces. So this is actually a really nice swing going in. And hopping down into the 1 minute to see what I was looking for. Like I said before, like the first thing of my model is, are we below or above midnight open? We're below midnight open. And the next thing is, are we taking liquidity in the contrary direction? Remember, I want to be a buyer since I'm below midnight open, and we're taking liquidity downward, which is what we want to see. And then the next thing is, are we disrespecting bearish PD arrays, which is from the contrary side? So as we can see here, during this ICT silver bullet model, we're sort of chopping around a little bit in here. And really, we finally get cleaner price action going into here. So I didn't like really anything here. Might get mistaken with this being a possible breaker. But an easy way to note why this wouldn't be a breaker is rather simple, is look at the way it's interacting with the breaker. You never want to see this kind of price action here. But again, some obvious draws that I would have would be these equal highs right here. This is way too clean. Retail is always going to have their buy stops above clean highs and above and below clean lows. And like I said before, we're taking liquidity down just before the session actually even starts. So, which is a good thing. You want to see that, giving you an extra bit of confirmation as to whether price is going in an upward direction or a downward direction. And we also take liquidity right here. Look at these equal lows here, manipulation leg here. We take them and we come up higher. And zooming in here, we also have the macro. The macro started right here at 1050, and we tap right in here. And this is now a breaker, as you have a low, high, lower low, higher high. And look at the way that candle lands compared to this candle down here with volume. So we're going to take this up close candle here, draw that out. And like I said before, not only do we have that, but we also have a regular fair value gap in here as well. So this is really, the market is going to show you its hand on days that are really quite easy like this, where you have, for example, even an order block. So it's a lot of levels all at once, which is going to give you the higher confirmation you need, and more confidence to get into these type of positions, because you have the fair value gap, you have the breaker, you already took liquidity within even the session, you have these clean highs, price breaks up, market structure shift, and we come lower into this fair value gap, the breaker, And then not only that, we even have another level. We have this inverted fair value gap that we're respecting. So again, a very high confluence area for price. And I'd be targeting, like I said, low hanging fruit, equal highs here. And we see that our main target leading up to the macro at that 1150, I probably would have been out right around here. Maybe trail my stop loss up to around here, or take partials up there, targeting really this upper end of the rejection block that we talked about earlier. But all in all, very clean setup. But really, we also had equal highs right here as well. Not only the ones that we had below, but like I said, the market is really showing its hand here. Easy draws, easy low hanging fruit. We have price here reacting a little bit consolidation, but it's fine. Order block there, we come up. And then not only that, here we also have a fair value gap that we also respect as well. So just before it finally hitting that, we hit it there, and then we start heading lower. So like I said before, this would have been my first target. This probably would have been my final terminus, but it's fine. We went down right during the macro, so ideally you'd want to be out there anyway. All right, so let's see. I'm just going to play now, and let's see if we got any setups for Tuesday's price action. So we were definitely below midnight open from what I'm seeing here. The only thing I didn't like is how we displaced a little too high here. It was quite aggressive, and I believe this was actually the Fed day for Japan, maybe, or for us. Something happened in the American markets on this day. So yeah, there's clearly nothing here that I would have engaged in any kind of price action. We could say maybe this could be a breaker, low, high, lower, low, higher, high. It did sort of close good there, but again, stopped out, and this is not really clean price action, so we could just skip that day. Playing the tape forward to see what we get for Wednesday. Hopefully we get some cleaner price action to compared to what we got to Tuesdays here. Let's see. So again, like we said, what do we always want to see? That if price is above midnight open, especially it's this above midnight open, and you also have a low resistance liquidity run in all this price action, like where's your swing lows in here? It's nowhere. So price is going to have an easier time heading lower. So are you more in favor to be a buyer up here, or are you more in favor to be a seller? And once again, we also have the ICT silver bullet window perfectly. And if I was looking at anything for the 15-minute, really the only thing I'd be careful of is this bullish order block that's right here, as that this down close candle was engulfed by these three up close candles, and you draw that out. Look at how price respects that there, right actually within the macro, which is perfect. And this is also a channel. Like, I mean, this is actually really easy market maker type of pattern here, because of course everyone's going to want to try to buy in this, sell in this. Retail's trying to sell this trend line, buy this trend line. What do? Take buy stops here, then take sell stops. So this was actually a really decent trade, decent day for going into the day overall. And let's hop into the 1 minute just to see how we would have framed the setup going into that ICT silver bullet session. So something to note on the 15-minute here on the right side, notice how we're taking liquidity leading up into the session. Because remember, here is that 10 a.m. It starts right here. This is what you want to see. It's taking liquidity in the opposite direction that you want. That's very, very ideal. And not only that, look at this rising 3 pattern. We take liquidity once, twice, and one last time. So that's really good. That's price being in our favor as well. And some easy draws where I'd be looking at, this would be a potential first partial area, possibly around there, or even these equal lows here. They're rather clean. But we can probably get in a little deeper, probably these two as being my final targets overall. But like I said before, I'm looking at this area here. I'm going to mark this so you guys can see that. And this will be my first partials area. And I'm going to copy and paste this so that I have it on the other side as well. And my final target is going to be down here on the equal lows. So like I said, you want to target low hanging fruit, but we're combining that with the 15-minute narrative that we have here at the order block. Don't forget that. So you're combining 2 different factors at once. Zooming into this, we also see that price actually reacts as an order block. The 10 a.m. opening price, these 2 down close candles engulf this 1 up close candle, and we see price trades up into this right here at 10:03 and then again at 10:06. So after price taps in there, we go lower, leaving away breakaway gaps. This is what you want to see when price is in a bearish environment. That's proving to you that we have bearish order flow. We do have a bearish breaker with high, low, higher, high, lower, low, but unfortunately we don't get, any pullbacks in here, which is fine, but we keep watching price. So after we come lower, really the only thing I'm looking for is some point of entry that I can enter at. And again, low hanging fruit once more. Price is constantly giving us signs that it wants to head lower. And remember, we still have the first, second partial, and then our final terminus down there. And these are some equal lows as well. And if this is really a breakaway gap, we don't want to see price trade up back into this. The macro closed here at 1010. So the only thing I'd be looking for is, for example, wicks are gaps. ICT always talks about this in his lectures. I'm going to mark this blue. I marked my fair value gaps blue. And not only that, we have an inverted fair value gap right here. If you draw that out, I'm going to mark it yellow or orange, for example, in this case. As we can see here, price respects. Look at the bodies respecting consequent encroachment of these fair value gap here and the inverted fair value gap. Look at the bodies respecting there. It sort of tumbles back and forth here, but remember, your main draw is going to be down there. So your focus should be down there, not where price is up here. And then we have another similar situation where you have, again, this is like it's repeating over and over. You have a fair value gap. That's the first thing, coupled with an order block. So again, you have two bearish PD arrays going in your favor rather than against you, which is what you like to see. The market tends to have two bearish PD arrays combine into one. Many times where after a larger move, it's going to have that just before heading lower once more because it's reaccumulating in this area. Because don't forget, the macro closed right here at 1010, so you got to give it time. And then here we head lower, we take out the equal lows, then we take out first partials, second partials really, really quickly, leading up into that 1050 macro. And here is that 1050 macro where we reaccumulate it again. But again, our target is the low hanging fruit, which is the equal lows. That's our main draw. That's probably the terminus for the overall day going forward. But again, nice sell. You know, we're above midnight open. We're looking for sells only, not buying. Unfortunately, we couldn't get another discount, for example, on that 10 a.m. opening price, but you know, it's fine still. The main rule is that you can only be a seller if you're above midnight open. So that's the most important thing. Pressing play on the tape again, let's see what Thursday brings for us here. Depending on where price is, we're going to see if we're going to buy or sell. And from the looks of it here, ooh, okay. So you guys may be asking here, you know, okay, we're going to be a buyer, right? Well, yes, you could think about it that way. But on these days like this, where they gap up during that 10 a.m. session, I don't like to see that. Remember that we like to see liquidity being taken against the side that we're looking at. For example, here we were looking for sells on Tuesday, right? So it's taking buy stops. That's perfect. Here, we actually went up during our session leading up to it because right at around 8:45, we started going up. So price is in a rush. These type of days, you're going to get chopped up. It's better to just leave them out. So continuing to play forward, let's see what Friday brings. Let's see what kind of price action we get to see if we are going to go higher or lower. And from the looks of it here, it looks like some kind of news was released or something here, maybe like a CPI or NFP kind of day. But again, I didn't like any of this. There's no price didn't go any lower, just kept taking buy stops. So it's an automatic skip. So let's head over to the next week to see what we got. Alrighty, so here we are on Monday. Let's hit that play button. And as we can see here, price heads lower for this Monday, August 5th trading session here. But from the looks of it here, we might have actually missed this. This might be actually outside the ICT silver bullet window. And again, we have to follow the hours of operation. So this might be a day of skipping. Yep. So from the looks of it here, you see, again, I wanted to see this type of price action happen a little earlier. So if we went up and up and up, let's say taking out these buy stops a little earlier here, maybe for a setup at that macro, it would have been nice. But unfortunately, we weren't able to catch any of this swing lower. Like I said, of course, you can be flexible and maybe enter outside of it. But me personally, I'm following what ICT said, and you have to enter your trades only within the 10 to 11 a.m. session. Hitting play on the tape read again. Let us see what Tuesday is going to bring for the next day, folks. And from the looks of it here, perfect. So we're seeing a sell-off. And remember, look at what price is doing leading up to that 10 to 11 a.m. session. We're taking out buy stops. Clean highs up here, clean highs up here. We take buy stops one, buy stops twice right there. Even in addition to this buy stop up here, which is the current week high as well. And really the only levels I'd be looking for on this 15-minute chart as any potential draws. We have to be careful here just because we might have a potential breaker because you have low, high, lower, low, higher, high. So this high right here on the 15-minute chart could be a potential draw for price during this 10 to 11 a.m. session. So here I am on the 1 minute here, and I'm going to mark my 10 a.m. opening price. Remember, we always like to see if we get a double discount going in for the day or a double premium. From the looks of it, price comes back up during that macro just to get one last little bit of premium for a sell. But again, we're only talking about this specific trading session that we're trading. And like I said before, has priced number one, we're above minute open, so we're looking for sells only. And price is taking buy stops in the contrary direction. This is what we like to see. So it's taking buy stops and then we sell lower. Again, with this being our potential drawdown here, and we also had these equal lows that it looks like price just left it for us, which is actually perfect. And then the final target down here would be these equal lows as well. So this is the final terminus, and this will be possibly our first partials going in for the day. And I'm going to mark here on the 15-minute just so I can take note of the buy stops that we're taking. I'm going to just mark this one right here. That way we can just make sure note that we took the buy stops going in for the day there. And I'm also going to mark one more because again, this happened just before we hit that session, which is still fine. But it's still important to note any kind of buy stops or sell stops that price is taking. So zooming in here, seeing if what kind of setups we would have been able to engage. So again, price comes down. This is just before the session. We're seeing price respect bearish PDRAs. This is what we want to see, because remember, you're trading the selling direction, not the buying direction. We got an order block as well. So we have the fair value gap coupled with the order block here, and price completely gets slammed down. That's what you want to see. And now here we are on this session. So we actually have a bearish breaker in this case, because you have high, low, higher high, lower low. So you're going to take here this whole range, draw that out. And once again, like I always say, price will always give you multiple PD arrays after moving quite a bit. And this is also almost a breakaway gap because we never trade back into the 50% of it. So if you draw it out on your chart, we never trade back into the 50% of it. So that's actually a breakaway gap, which is even better for price action. And like I said before, we have multiple, PD arrays going in together. We have this bearish order block here. And you could also even take this this volume imbalance here. That's actually a little small to see, but it is there. Look at how price respects that right there. It wicks into it, and then we had lower. And then once again, price displaces, comes back into this SIBI here, coupled with volume imbalances. That's what you like to see. The only thing I would be wary of is how we're wicking, but again, it could be for price to engage retail here, trying to buy in, and then we had lower after. And then we also have an order block here. Let's mark that out so we can see that before hitting the final terminus, which was down there. And here's the trade. So this was how your chart would look like. Remember, fair value gap just before the session, order block, swing lower. Look at the size, look at the volume of that candle. That's your bearish breaker. Price respects look at the bodies respecting consequent encroachment. We had lower fair value gap, and then we come down lower after hitting the order block, hitting that final terminus, which is right here. And let's go to the next day, which is going to be Wednesday. Let's see what kind of price action we get. Ooh, looks like we got a little bit of a heavy sell down going in from the Asian session. And again, like I said, we're above minute open in this case. I like that we're taking buy stops before we reach that session, which is perfect. We even take more buy stops in the session, which is even better. And the only levels I'd say, probably we have a high, low, higher, high, lower, low. We have a bearish breaker right in here. Let me draw that out for the 15-minute chart. And we see price tab. It passes a little bit consequent encroachment, but that's fine. Look at the respect at the end of the day. That's exactly what we want. And again, possible targets. And of course, we have a trend line here. Retail is trying to buy and sell within this trend line. If you guys put a trend line from the top to the bottom, you'll see again, retail selling and buying in here. That's perfect. That's what you want to see. But our focus is on here because this is where sell stops are going to be. Dropping down into the 1 minute here, see what kind of setups we would have gotten. Again, this is actually one of the cleanest price action I've ever seen. So, and this is not a joke. Again, as we can see here, buy stops being taken, you're above midnight open, and you're taking liquidity in contrary directions. That's what you like to see. So we're taking liquidity. We taking liquidity again and again. And let's mark the 10 a.m. opening price. I'm going to mark that so we can actually see that. So, okay, so this is actually what I'm talking about. So this is what I was talking about earlier. So remember, 10 a.m. opening price, minute opening price. You're going to use both of them in combination as a way to gauge whether price is in a deep premium or deep discount. Price can be in just a discount if it's below minute open, or it could be in a, just a premium if it's above minute open. But in this case, since price is above both 10 a.m. open and midnight open, it's in a rather deep premium. Look at how high price is. We haven't taken any lows. One could even say this is a possible market maker sell model in addition with a low resistance liquidity run. Why is it a market maker sell model? Look at the consolidations you have here going in and leading up to that, and then smart money reversal all the way at the top. So this is actually one of the best price action I've ever seen. And again, possible draws could just be these lows here. You have first, or rather, that technically the entry would have been here. So I probably have my first draw here, second draw here, and then my final targets would be within the order block that we marked on that 15-minute chart here. So that's actually would have been like a more major target that final terminus going in. But zooming in here to see how we would have framed the setup, again, it is a little late. It looks like we took it and then finally leading up to the macro, because remember, time and price, sometimes at 10:30 or at 10:50, it can happen, in either or. But as we can see here on the macro here, right at about 10:50, practically just before it, we have a what? We have a fair value gap with, look at all these breakaway gaps here. If price is actually bearish, why would you want to see it come back in here and fill this? That's not what you want to see. In addition, you also have a bearish breaker, which is a high, low, higher high, lower low. So this whole thing is going to be a bearish breaker, which what does price do? It taps right into it as well. And as we can see here, you couple the breaker with the fair value gap, and you know that these are breakaway gaps. You don't want to see price trade into that. And again, you also have the macro at 1050, which kicks in right there. And I always say that after a large move, price has multiple PD arrays. We have two, but there's actually one more that you guys may not have seen, which is this inverted fair value gap. So you have multiple PD arrays working in your favor, a breaker, a fair value gap, and an inverted fair value gap, all working at the same time in combination with the larger time frame PD array, which is the 15-minute breaker. And as we can see here, price trends lower, taking out anyone here trying to, remember, like I said before, they're trying to buy up all this with that retail trend line that we had there. So there's going to be sell stops. So we trade lower, lower. Look at how price is leaving all these gaps. That's heavy bearish order flow. That's what we want to see. And again, we have another fair value gap in here. You can combine them both if you want, or just one. But as we can see here, price trades into the 50% of it right there perfectly. Look at the bodies respecting that. And then after that, we finally had lower, perfectly tapping in to the bottom end of the order block that we marked out earlier. But look at how we wick first within the consequent encroachment of it. So again, this is probably one of the more cleaner trades that we had for this week so far. I mean, as you can see, this is the fastest downward move that we've probably had in any of the back testing. 18 minutes, you had half a percentage move going down lower. So really, really good trade. And continuing to back test, let's see what else we get here for Thursday. So from the looks of it, Thursday sort of consolidates. It as expected, because since the previous couple 2 days have been quite intensive, you had a large downward move Tuesday up, and then Wednesday seems to have been really bullish. But from the looks of it here, we also displaced earlier before, just before the New York session for the ICT Silver Bullet. Looks like at 8:30 we had some news, so price consolidates. So let's see what else did we have on the 1 minute, just to see if possibly there was an entry. And from the looks of it here, again, very interesting price action. You could have technically maybe taken some scalps here, but again, there wasn't really any low-hanging fruit to target. Yes, you could say technically you have these highs up here, which that was definitely a good target. But unfortunately, it looks like price just simply falls short and consolidates throughout the rest of the day. It is as expected, since remember, Thursday is technically Friday in the Asian markets, which could also pose an issue going for the day. But if you were looking for a smaller scalp, you do have violation of bearish PD arrays. You're taking liquidity even within your session. So you took it before it and during, which is great. And some PD arrays that I look for a possible long here, because remember, you are below midnight open. When you're below both the 10 a.m. open and the midnight open, you have what's called a double discount or a deep discount. Because again, you're below two opening prices, the day practically where it opens at 12 a.m. and the hour which you're trading in. So that's really, really good. It gives you, better confirmation going forward. And again, the PD arrays that I'd be looking, if I were taking, this scalp, would be this fair value gap here. And then I always say, price is always going to give you multiple PD arrays, especially where your entry is going to be. And as we can see here, we have an inverted fair value gap. You draw that out, and you have the regular fair value gap here, and you also have the inverted fair value gap. So you have two working for you in your favor. And then we have an order block here, as this down close candle was engulfed by these two up close candles, and you draw that out on your chart. Now you probably want to get probably above that 10 a.m. opening price, just because the 11:10 macro finished there, and we're already so late and price still hasn't gotten anywhere. So already, you should start thinking of possibly trailing out. But if you weren't able to get out there, let's say you did enter on this rejection here, that's fine. Maybe you trail your stop loss here. You'd probably be out there for the day and you're done. And continuing the back test, let's just see what we get for Friday. So usually these days, like I said before, the Asian market is technically closed. The only market that's going to be open is the American. So we cannot expect really too much from this Japanese currency. Not too clean, but again, we're going to see what we get on the 1 minute. And something to note here is look at the gap that we have in here. We see price just fall short of it. Unfortunately, it was rather close. So I'm not going to mark that. And really, I don't have anything else but these equal highs, maybe on the 15-minute as possible liquidity that price took for buy stops. There's going to be buy stops above there. And my obvious draw would be these equal lows down here. And here we're on the 1 minute. And surprisingly, we actually do have a setup. I guess as they say, don't judge a book by its cover, and which price really does show it here. And our low hanging fruit going in for this day would be these equal lows down here, as retail is going to have their sell stops below these lows. So it's going to make it a really easy area for price to engage in. And not only that, we have a market maker sell model, consolidation, 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 taking liquidity in the contrary direction, which is, remember, we want to go downward. And let's see if we have a double premium going in for the day, as remember, especially we like to be above 10 a.m. open and above midnight open, which in this case we are. So we're above in the time of entry, we're above about 0.17%, and above midnight open, we're up quite a bit. So we're up about 0.62. So you have two things working for you in your favor. And really how I would be looking at this here, I like how here we violated this bullish PDRA, which was the BISI. And as we can see also, we have fair value gap here. And let's see if price always gives us our classic double PD array. For example, we want to see a double bearish PD array. There's a small fair value gap in here. Maybe you can count that. That's fine. But going into the session, I'd probably be looking at this. We do consolidate a little bit leading up to that macro, because the macro is actually right here. The macro starts there, which explains such, downward movement rather quickly. And not only that, I see a trend line in here as well. Retail seems to be buying up this trend line. I'm going to put here sell stops are going to be below here. And we see price tap also into this bearish order block here. I'm going to mark that out. If you guys also want, I'll mark it with the FIB tool, and I'm going to put the 50 only. So that way we can see it a little cleaner, and use only the 1 minute. And you see price respect the 50% of this bearish order block. And then we trend lower. Again, when we see breakaway gaps, we don't want to see price stop here and trade back into it. We want to see it continue going down forward. And then let's say you weren't able to get in entered up there, you still have a chance, as that ICT 10 to 11 a.m. session hasn't completed. Your next PD array is right here in this bearish PD array, which is another fair value gap here. Price trades up. Again, look at consequent encroachment, doesn't even get to it. We trade lower. And once again, the same thing repeats over and over again. Look at the bodies respecting that the consequent encroachment of this fair value gap in here as well, coupled that it's also an order block. So we always say that after big moves, price gives two PD arrays together or more, especially in the direction that you're intending. And we have this breakaway gap here, and then we trade lower. But unfortunately, like I said, we didn't get down into that final terminus target. But you had multiple areas. You had first partials, second partials, and then you can maybe chair your stop like right around here above the order block. And you still would have at least secured, let's put it around 0.20, which is still quite a bit if you're trading the Japanese futures, or it could also be Forex depending on how much you're risking. But again, that's up to you. And then after that, it looks like we trade back upward. Price got a little bit of a discount here below the 10 a.m. opening price, and stop hunts anyone trying to sell after there. So again, I hope you guys enjoyed this video. This is just episode 1. We stopped at Friday, August 9th. Let me know if you guys want me to continue these type of backtesting sessions. This is only going to be episode 1. And again, we're just trying the Japanese yen dollar. I could easily also try euro dollar. I could try GBP. You guys let me know, and I'll sure be able to check that out. But comment down below if you guys want to see that, and also the notes as well. And I'll catch you guys in the next video. Peace.